That was my scenario where I had to dig myself out of the hole. At the time of 2018, I was in a scenario where I couldn't get a regular bank account. This is a huge one. As I just stated, most of us will experience having to finance or, go into debt for something at some point in time. In theory, of course, you wouldn't want to if you had the cash, but the majority of the cases, the way our economic system works, we will be financing something at some point in time. How do you think that situation is going to play out? How much do you have to pay for the money that you're borrowing? How much are you paying in fees and interest and the terms that you're getting on that debt when you go for it? Reaching past the $100,000 mark in savings and investments has been a hell of a journey. What I've learned is there's multiple variables that played into me reaching that goal in the window of time that I did. So this journey goes back to about 2018 for me. So at the time of this recording, around 6 years, I had a negative net worth and I had a credit score that was a FICO score below 515. Since that point in time, I've gotten myself to FICO scores across the board of 780 plus and a positive net worth, if you will, or investable assets and deposits, etc., of 100,000 plus in savings and investments. One of the biggest key components that I learned as I look back on how I achieved that was credit. Credit played a huge role in me accomplishing that goal of $100,000 plus in savings and investments. And there's three major contributions that credit brought to the table that I want to cover in this video really quickly. So the first is going to be access to the financial system in the first place. And I mean that from the sense of accessing quality banking institutions for bank accounts and other financial resources that we exercise on a daily basis to help us function in our lives on a daily basis. Believe it or not, if you pay attention, everything from bank accounts, cell phones, and even in my case, from a career point of view, background checks on jobs, they all want to know what kind of credit you have and financial reputation you have. Imagine not being able to get a decent cell phone, access a reasonable bank account, or even in some cases get a job because you have poor financial habits or you have a poor financial reputation. That was my scenario where I had to dig myself out of the hole. At the time of 2018, I was in a scenario where I couldn't get a regular bank account. I only had, I believe, like a NetSpend account at the time. At the time, they weren't doing hard credit checks for cell phones that I experienced. But, if I had went at that time, I probably wouldn't have been able to get a decent cell phone. And I definitely would not have been able to get back in my field of financial services and banking. So that was a huge starting point to me getting access to some of the basic functions in my life, but also allowing me to get back into a really good career that gave me a solid income and fueled my ability to contribute to my savings and investments. So that was the number one thing, was just access to the financial system in the first place, and the regular world in some extent in the first place. The second thing was going to be fees. When you have a poor financial reputation, a lot of companies and financial institutions, they are going to want to collect as much money upfront from you as they can because your financial reputation indicates that you may not be good for paying it back. So they're looking at it saying, well, I need to minimize my risk or at least prepare for any potential future losses. So there's a lot of upfront fees and deposits on a lot of different things when you have poor credit. Like even when you go to activate water or electricity utilities, again, cell phones, when you go to get a cell phone, they will request deposits from you and lock that money away for an extended period of time as you establish service with them. And that can cost you a lot of money if you think about it. That's money you're not saving and earning interest on, or you're not investing. That money's locked away somewhere as a security deposit for that particular company or entity. So bank accounts are the same way. They'll put you in an account that is almost certain to have service fees and other charges because your financial reputation is poor. They're not going to open up those higher quality banking products to you, even if you might meet other metrics to qualify for it. If your financial reputation is bad and they let you in the door at all, you're likely going to get stuck with a banking product, a checking account or a savings account that will likely be riddled with fees and limited services. So when you think back over, your daily functions as an adult in our society and this economy, credit plays a huge role in reducing fees and deposits. It reduces the need for companies and entities to feel that they have to collect so much from you up front because they're not sure if they're going to get it on the back end. So we can't avoid financing, things in our society for the most part. We can't avoid debt. I know a lot of times when you're thinking about saving, investing, it has this counterintuitive, mindset or like reaction to debt. Like, the second you say debt, it's like a seesaw situation. But there is a balance between saving and investing effectively and still navigating financing and debt at the same time. It's something you actually have to get good at doing. So the second thing is going to be avoiding or minimizing fees and deposits from building a strong financial reputation through credit. When utility companies and cell phone companies, etc., check my financial background or they check my credit, because of the position I'm in, it's very rare to never that I have to put money down or put deposits down or get stuck with products or services that require additional fees. The third and final one is going to be the cost of capital. This is a huge one. As I just stated, most of us will experience having to finance or, go into debt for something at some point in time. In theory, of course, you wouldn't want to if you had the cash, but the majority of the cases, the way our economic system works, we will be financing something at some point in time. And so now what dips into your savings and investable assets is going to be a deep connection to the cost of capital. How much do you have to pay for the money that you're borrowing? How much are you paying in fees and interest and the terms that you're getting on that debt when you go for it? It's a huge difference to have to go finance a car and have less than a 600 credit score to go do it, even if you have a good income. Because of that lack of financial reputation, you're likely going to be stuck with double-digit interest rates. In today's climate, at the time of this recording, think north of 15 or maybe even 20% interest rates on an auto loan. I go to finance that exact same vehicle. I may only have to pay 6, 7, 8, or 9% on that same vehicle. We have a 10 or 15% spread on interest on the same debt. How do you think that situation is going to play out? Very important to make sure that when you are on your journey towards savings, towards investments and savings, reaching these benchmarks of 100,000, 250, etc., a huge factor is going to be making sure that your financial reputation is in order, because when you go to borrow, trust me, that money is going to some banks or financial institution or lender's pocket to secure them and their profit instead of going into your savings account or your investment account. So just to kind of recap my journey to surpassing $100,000 in savings and investments. Number one, credit played a huge role in accessing the financial system and the overall economy altogether. Number two is going to be minimizing fees and deposits, money that's getting chewed up for the security of that entity because your reputation is poor and not being saved or not being invested in earning interest and gains. Number three is going to be cost of capital, your ability to finance and get debt as necessary, but to do it in the most cost-effective way possible. So you're saving as much as you can on interest costs and any additional fees, and you're getting better rates and terms. So more of your money can go into your savings, more of your money can go into your investments. Those three things were pivotal to me breaching past $100,000 in savings and investments, and where I'm headed on track to reach my next benchmark in the next year and a half or so. Comment down below. Let me know where your financial reputation is, where your credit is, how it's contributed to where you are financially in a positive or negative way. Comment down below and let me know what you think. To all my pioneers, welcome back. To my new viewers, welcome in. As always, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon. This is my blueprint for financial empowerment and self-sufficiency. This is my blueprint for optimal health and body mastery. This is my blueprint for mental, physical, and spiritual momentum. This is my blueprint for prosperity.